Tesla is up 4.5%, and I believe we're probably going to see a run up to $240. Over on Twitter, which if you guys don't follow me, I highly recommend you do. I put so much content out and so much value there, and it's also just a faster place to get information from myself rather than YouTube. But this morning, I hit calls. So far, I'm up about $5,900. I did take a small loss on the last bit of puts that I had left. We're going to cover all of that, but we're going to go through first my bullish thesis. So yesterday I wrote, I recently liquidated a significant put position in Tesla, securing a $13,000 profit. Presently, I'm maintaining a smaller put position. This was posted as of last night, which I did end up closing that out. We're going to talk about that in a moment. I said the stock is currently stabling at the 200-day SMA, which is the simple moving average, indicating a potential rebound in the coming weeks. There's an observable inverted head and shoulders pattern forming on the 4-hour chart, suggesting a possible trend reversal. My strategy involves exiting my remaining put positions, even though it's going to be at a minor loss, unless we had a massive sell-off today, which didn't happen, and I'm going to transition my position into calls for either March or April. I plan to implement a stop loss at $190 while targeting my take profit level at $300 and $375. It's crucial to note that a definitive breakout has not confirmed yet. This was before the breakout today, which still has not confirmed anything. And I said my decision is to adopt a long-term position based on the adherence to this key institutional level. It's alignment with the broader bullish trend and the current market momentum. Basically saying the market's going up massively, it's some dumb shit, and it shouldn't be, but I'm not going to go against the market. Should Tesla breach the 200 SMA and trigger my stop loss, it's going to likely decline to $150, aligning with the substantial order block that we've been covering here for the past couple of weeks. So that from there, I ended up closing out my position. This was within my premium Discord, but then I posted it here on Twitter right after. I ended up grabbing some calls, closed out my last puts for a $5,000 loss. And now let's move over to look at the technicals. If you've been following me or this channel, you know that over the past couple of months that even though I'm a long-term shareholder in Tesla, I have been bearish about the company short-term. And the reason that I'm going long in this position is nothing fundamental. I need you to actually understand that none of it is fundamental. It's basically entirely, in my opinion, off of greed of the market right now and the fact that I think the rest of the market's probably going to rally for the next 2 to 3 months. And I don't think that it should, but what should happen doesn't make people money. It's because 90% of people trade based on what should be happening, and it doesn't end up working out. What I have noticed is just to trade with what the market is currently giving you. And back here at earnings, the market was giving us a sideways consolidation until finally we broke the symmetrical triangle, sold off from 250 down to the 200 SMA on the weekly, even further down to that 190 level, which is point of control, and then bouncing back up. We've been talking about $180 to $190 over the past couple of weeks when I was going short up around 212 and 220. But as of the video that we put out, I believe it was Friday, or maybe Thursday, because I didn't put a video out on Friday, I believe. We were talking about how I was holding on to one last put position, and that since we filled this gap over here, if we continue to sell off, I'd take profits at about 195. Something else that has also changed is this massive bullish order block that has formed between $210 and $190. This, and now pushing through 220, which was a strong heat map level, indicated as well by this very thin area on the volume profile, seems that there's no reason that we shouldn't see Tesla push back up to 240 or potentially up to $245 within the next couple of weeks. This would fill the gap that we have from earnings, push us back up to this heavy volume level from about 245 up to 260, and I do believe from there we will most likely reject and potentially test the 220s once again. So even though I was talking initially in that bigger time frame post about potentially holding up to $300 or $400, I think my short-term target is at least going to be $240. As I said before, my stop loss was going to be 190, but at this point, I will probably move it back down to 203 and maybe at worst case scenario, just not make any profits off of this and close it around break even. The way that an inverted head and shoulders pattern forms is that we have what's called a neckline. And in this instance, our neckline is basically a zone from about $225 to about $220. And what this area is going to represent is a major resistance level. If we had a regular Head and Shoulders, it would be the opposite, where it's actually a bullish run that ends up reverting bearish. And in this instance, it's a bearish run that ends up reverting bullish. Basically, this level, the neck zone or the neckline, is our major resistance. This is where we've dropped down, rejected, pulled back down to make this lower low, rejected, and then made an equal low to this prior shoulder. If I actually just take my draw tool out, you're going to be able to see this would be our shoulder, followed by the head, followed by the shoulder, and then what normally happens is we get a breakout up through this neckline. So that's why I said in the post that there's no confirmation yet of a reversal, and there's no confirmation of a breakout up to 245. What I'm blatantly playing here is a mix of greed from the market, the fact that we have an inverted Head and Shoulders, and I'm playing probabilities. I'm also looking to the fact that it looks like there's very low volume up to 245, and I do believe as we move into the S&P 500 and QQQ later that we will probably see the rest of the market continue to rally, because QQQ, SPY on the weekly charts, everything is looking like we should continue to run at least until the end of December, even though I don't believe that theoretically should be happening. So let's bump ourselves out to the weekly chart. And this is a really, really big time frame, but these levels are extremely important, and these charts should always be looked at whether you're a swing trader or you're somebody who is a long-term investor. The reason that technical analysis works, and most importantly indicators work, is because institutions use them. If an institution didn't use that indicator and there wasn't anybody out there using it, nobody would be reflecting price and actually moving the stock based off of those specific levels, which is why highly used institutional instruments like simple moving averages, especially the longer time frame ones on the longer time frame charts, are so important to use. So looking here, this is the weekly chart as we said, and you can see that basically since we've broken up through this 200 SMA, we have obviously never broken below except for back in 2022 where we quickly recovered and moved our way back up. You can see here that we had this resistance level that now we're starting to use as this channel for a potential bull flag breakout. So the 200 SMA that I had referenced before was this level right here. My planned entry was at 213 with my stop loss down here at 188, because if we broke this heat map zone and broke the 200 SMA and had a death cross, which is when this 50 SMA crosses down through the 200, that would most likely not result in a false breakdown. That would, for me, be a complete, break of pattern, which is not something that I want to see. So looking at the weekly chart from here, it looks like our next level is at least going to be back up to this resistance level where we had this rejection before, which I have highlighted in red. So even at this point here, you're looking at a 1.5 RVR. Once we push up into this level, what I'll be looking to do is to either sell half of my position for a very, very solid profit, which is most likely what I'm going to do, or I could take this position with the same requirements and move it all the way up to where price is, and then I have a trade that's not only going to be free if we hit the stop loss, but more importantly, not only would it be a free trade if we actually came up to this level and I pulled my position up, but we could let this thing continue to run and continue to trail our stop losses as this thing moves up potentially into the 300s, as I've spoken about before. Now, as far as news for Tesla, we did see something on Cybertruck today, which is, to some people, sounds ridiculous. In my opinion, Tesla is putting in their agreement when you purchase a Cybertruck, they will sue you for $50,000 if you try to resell the Cybertruck within the first year. And I think Porsche does. I know Ford did this historically with John Cena. I think it was a Ford GT he purchased. He ended up selling it within a year. And the whole reasoning for this usually is because of number one, price gouging, but number two, for a lot of other companies, exclusivity, specifically when it comes to like the Ford GT or a Porsche where they're not making a lot of them. They try to keep it extremely exclusive and to stop people from price gouging. Now, as far as the Cybertruck, I don't fully get it. It's not one of those things, in my opinion, that is supposed to be an exclusive car, to where they're only making 5,000 or 10,000. So I do understand the whole price gouging reason, but in my opinion, it's not a reason for me to not buy the car. I think another reason too is honestly going to be a lot of YouTubers. Like I'm not going to drive around and like shoot grenades at this thing, although it would be hilarious. But I was just going to buy one because I'm like, dude, I own Tesla stock. It would be fun to do it. But I think their main reasoning also is to stop influencers from doing that. Like Amazon, their refund policies have changed significantly because influencers will purchase all this stuff. They'll do reviews on whatever the product is, and then they'll completely return it. If you have all these influencers who buy the car, bring it to a car show, and then flip it in a month or so, it could look bad on Tesla's behalf. But for me, it's not a reason to not purchase the car. I feel like if you're somebody who's going to buy the car, like you're just going to buy it. No, nobody can talk you out of it. It doesn't matter. If you're somebody who's into it, you're probably completely sold on it. And if you're somebody who's not, then you're probably completely against it. But let me know what you guys think about this. Something else that you should be considering as an investor or a trader is CPI data that's going to be coming out tomorrow, Tuesday. There's less than a 10% chance of a rate hike at that meeting, so it's unlikely that we will get market moving data to shift this unchanged decision, said Jamie Duda. It seems like the Fed is not going to raise rates one more time going into December. As long as rates remain unchanged, there is no reason that we don't see the S&P 500 continue to break out of this resistance level and push itself up to $450 as well as $460. If you're somebody who is newer to trading, the idea of the Santa rally is probably something that sounds so stupid, but it really is true. And the market specifically is greedy. You have to think of the market as a gigantic child. It's very rarely going to react accordingly. It's either going to believe that the sky is falling at all times or that everything is amazing and all stocks go up. That's kind of how the S&P 500 is. With CPI data coming out tomorrow that I don't think is going to really be anything monumental to push the market. Maybe, a couple hundred points on the Dow, but I'm not talking about anything insane. But at the end of the day, I just don't think that we're going to get a rate hike at the end of the year. As we continue to see CPI not coming in massively unchanged, we're probably going to run going into November and December. I don't think it should happen. I don't think fundamentally the economy is anywhere in a state that we should just be pushing up to all-time highs. But the stock market and the economy are two entirely different things. Looking to statistically, 86% of the time over the past 13 years, the S&P 500 is green in November. It is statistically the best month to be invested in the S&P 500. The average return is a 3% return, which is massive for the S&P 500. 69% of the time in December, we are green as well. So November, looking like we're going to probably see a continued rally, since I don't see anything major that would stop the market from running. I don't see CPI being insane. I don't think they're going to raise hikes at the end of the year. If they do, this is all going to change. We don't have any more massive corporate earnings coming up. So the only thing that's going to drive this market, I believe, is going to be continued greed. So from here, the next level for the S&P 500 is 450, from 450 up to $475. And that is going to move us over to QQQ. And this is something that we talked about over on my Twitter. My Discord community, which has over 12,000 members, is completely free. You get access to courses, live streams, seminars, webinars, everything. We've been talking over there about this weekly setup on triple Qs. As I've said before with the S&P 500, I don't believe the market should be running, but it is. And we're still trending up, and we have a lot of massive greed behind this, but there's no reason to be shorting at this moment. Looking at this, we have a massive cup and handle pattern. Yes, we have a lot of selling order blocks sitting here, but this massive cup and handle is pushing through. We have a very low area of volume on the volume profile from 364 all the way up to 400. And it's looking like once we push through this, our next level will be 400, and then finally back up at $420. This is also coupled with the fact that, as same with the S&P 500, November is one of the best months for tech and for QQQ, being positive 79% of the time with, you guessed it, an average return of 2.83%. Now, the last thing I want to bring up is a couple of CEOs who have been selling stock within the companies that they obviously run. This is not a sell signal for any of them. This doesn't mean that this is all of the money that they have. It doesn't mean that this is an infrequent pattern to which they withdraw any type of dividends to themselves or any type of distributions. Why would you ever sell your shares within the company that you know like the back of your hand if you felt the company was undervalued? The only time that I personally would be selling shares in any of the companies that I own or that I'm in a board on is if I think the stock is overvalued. It's the same way as when we see companies doing share buybacks or doing, selling shares out to the public market. This is Lisa Su, number one. This is AMD. I post all these on my Twitter, so if you're not following me, you should be. She has sold over $8.5 million as of November 7th. Netflix CEO Reed Hastings, he has sold $35 million worth of stock. When the market's pumping to highs, CEOs are selling. It's never a sign that the shares are going to be undervalued. Mark Zuckerberg closed $62 million. And as well, Dara Khosrowshahi, I think that's how you say his name, who's the CEO of Uber, he has closed out $19 million. So as we're pushing up to all-time highs, as these stocks are starting to become overvalued, it does not mean that instantly on a dime that we have to see the market retrace and pull back. Just because something is overvalued doesn't mean that that it's going to stop running. So many people lose so much money, including myself in the past, trying to short things that are always running. This is not the time to be shorting the market. I don't think the market should be continuing to run. I don't think Tesla should be pushing up to 300. I don't think, QQQ should be moving up. I don't think any of this should be happening. Fundamentally, it really doesn't make sense to me. But at the end of the day, follow the trend. Like, I've been doing this for 9 years. If I would have made all of my investing and trading decisions based off of what should happen, I'd end up getting killed. This is one thing that I'll share with you guys very briefly, but we run a lot of trading bots within our Discord community. And one of the trading bots that I like to run is NVIDIA. You can see all of them up over here on the right side of your screen. If you do want access to all those, you can use the second link within the description of this video. It's looking overbought. It has to sell off soon. Look at all of the trades I would have missed. I would have missed a 16% return. And so many of these moves, even if they're 2.6%, 1.4%, 0.7%, all of those moves add up. And it's even worse when you're shorting a stock that is doing nothing but rocketing. Always use caution, guys. If you want to trade with me every single day, go check out the second link in the description. As always, guys, thank you for all of your support, and I'll see you next time. Peace.